Hello everyone, welcome back to our channel and welcome back to this video wherein we wanted to share with you as to how the markets are reacting sharply to fiscal uncertainty and the rising US debt. Now, US government bonds and equities saw a broad sell-off as investors grappled with growing concerns over the country's fiscal outlook. The immediate trigger, a weak 16 billion auction for the 20-year Treasuries and the political push behind the proposed tax bill, which is expected to add 3 trillion to the national debt over the next decade. The 30-year Treasury yield surged to 5.096%, the highest since 2023, reflecting a sharp drop in the bond prices. The S&P 500 fell 1.6%, with nearly every sector in the red, especially the financial sector, the real estate sector, and the healthcare sector. At the heart of the investor anxiety is the familiar challenge: how to fund the growing deficit in a high-rate environment. Moody's recent downgrade of US credit ratings has only added to the urgency. Meanwhile, the longer duration bonds are facing stiff resistance. Analysts note that the markets have no appetite for duration and every long end auction is being heavily scrutinized. Adding to the volatility, tech stocks also took a hit. OpenAI's $6.4 billion acquisition of Jony Ive's hardware startup raised eyebrows, dragging Apple, Microsoft, and Nvidia shares lower. Now, there are key questions that need to be answered ahead. First and foremost, can the US Congress deliver a tax plan that stimulates without destabilizing? How will the global investors respond to a mounting US debt in an era of rising rates? And lastly, will the equity markets begin to consistently price in the fiscal stress? In wrap-up, what we can say is that this confluence of fiscal policy, investor sentiment, and tech disruption is shaping what could be a pivotal summer for the markets. Now, that's all that we wanted to share with you in this video. Hope you've enjoyed this video. Do stay tuned in for more. Thank you.